Good day, fellow investors. In my Value Quadrant recent video, we discussed 10 interesting stocks, and here was a great comment about why am I investing in those when there is still risk, higher risk, less risk, how to, let's say, discuss that in a diversified portfolio value investing strategy. And we discussed recently the concept of prudence, being in cash, being hedged, and one of those is now what we'll discuss, being in value. Because if you are in value, then you don't need to be hedged, and that's the key of value investing, because hedging has a cost usually, as we discussed yesterday. I want to talk about value investing hedging using my diversified portfolio example, and I'll even show you 5 stock examples. As you know, I have a diversified portfolio, which is my educational portfolio. Some people need 20 plus stocks for more ideas, things like that. And the best of that goes into my model portfolio, and the best of that goes into my personal portfolio that now has 1 position. But let's immediately start discussing what is this. You can check it all on my research platform, see if this value investing strategy fits your long-term wealth compounding goals. 21 days, enjoy the platform. If not, send me an email for a refund. Also for questions. But let's discuss what does value investing mean. When I say value investing protection, it doesn't mean that if the market goes down, value investment stocks go up. No. Value investing means that the fundamentals should deliver your returns over time. And let's immediately go to here, 1 position, here we have exposure, Archer Daniels Midland 4.5%. Now, I bought this somewhere here, now it's higher, the dividend yield was closer to 5%, now it's a little bit lower. Another thing here to understand when you look at the percentages here, when it comes to diversified portfolio, a full position is 5 to 6%, a medium position is 3%. What does it mean, a medium position? It means there is still risks in the stock price, or better to say there is still opportunity in the stock price declining, when if the stock price declines, I can bring it to a full position and so double down with lower risk and higher returns. And if we look at Archer Daniels Midland, now it's 4.5% because I bought it somewhere in the 40s, I think, so the dividend yield was higher. But that's the focus here, that dividend yield. Because that 5% dividend yield is the fundamental hedge I'm talking about. Because it will give you the cash in a crash. Not the crash you think all the crashes exist are like this 1 month and then we are up after a few months, or like the April one, we are down a month and then we are up next month. This is the crash I'm talking. 47% down after a decade. That's something you will live sometimes in your life, and that's exactly when the most wealth compounding you can do happens, if you are exposed to the right things. Now, if you look at the portfolio, some things also go up. So this is Alibaba that more than doubled. So it was 6, now it's 11%. There are some other things that go higher. So Acomo is also a little bit higher, but still a full position. But for me, I'm not selling till I spent all the money here. This is an educational portfolio for me, for my research platform. We follow stocks so that we know them. I hope I'll also deliver a 10% return on this diversified portfolio. Some of you time it differently, things like that. So I think it's creating value. And the most value for me is in the knowledge I am gaining from following all these stocks and owning them. Another business here, Amsterdam Commodities, 5% yield, food business that I can reinvest. Aker, the price is 25, the dividend is $2.5. That's 10% reinvestment dividends, no matter what happens out there. Aker is a mid position because I still think there can be downside in oil when I can then bring the position to a max position higher. Another example that we discussed, the videos will be in the link in the description below for the stocks we are discussing. These are all discussed here on YouTube. Nomad Foods, good dividend, and the stock is again declining, but the cash flows, the buybacks make it interesting. However, I said, let me just check how things going and then buy more. Similarly, Nutrien, when I think of the cycle there, I bought it somewhere here, but we are still in the mid-fertilizer cycle. That's not yet destruction. However, it is interesting. Another oil exposure, so a little bit more tilted to the, let's say, value in oil, lower prices. Rubis bought somewhere here. Now it's higher on takeovers. When that is taken over, you get more cash in the portfolio to invest in something else. As said, I might sell this and this when I have other opportunities I want to learn more about it. Maybe this bring it down to a medium portfolio position to follow it. Value will compound 10% long term. Hopefully the businesses will compound that, and that will be reflected over time, plus the dividends, plus the growth, plus if we can buy things on the cheaper. No need to be hedged. If it goes lower, you simply buy more patiently over the next decade of terrible stock market performance. Will it happen? I don't know. If it does, I'm ready. If it doesn't, I'm still also okay. Yes, I am taking risk in the form of volatility. These businesses are fairly priced for 10% returns, can get to 20, which means minus 50%. At what time? Most of those will offer a margin of safety, and that's how we are investing here. So that's the concept of value investing. No matter what happens, we do well on fundamentals. You can check my research platform if you want to see even better situations there.